If you are looking for the hidden backbone of the artificial intelligence revolution, you might be looking in the wrong place. Everyone is talking about the chips, the GPUs, the high bandwidth memory, the processors that power our future. But very few people are talking about the complex critical infrastructure required to build those chips. Today, we are going deep into a company that sits at the very heart of the semiconductor supply chain. We are analyzing UltraClean Holdings, ticker symbol UCTT, based on a comprehensive review of their financial filings from 2020 all the way through the third quarter of 2025. We are going to uncover why this company is poised for a massive transformation as we enter the next supercycle of semiconductor manufacturing. To understand where we are going, we first have to understand the journey of the last 5 years. If you look at the 10K reports from 2020 and 2021, you see a company capitalizing on the digitization boom. Revenue was climbing, and the demand for wafer fabrication equipment, or WFE, was insatiable. But then the cycle turned. The 2023 annual report tells the story of a brutal industry correction. The memory market collapsed, inventory piled up, and capital expenditures were slashed across the globe. For many investors, this is where the story ended. They saw the revenue dip and walked away. But if you walked away in 2023, you missed the signal. The financial documents from 2024 and the quarterly reports from 2025 paint a picture of a company that didn't just survive the downturn. They used it to optimize. They streamlined their operations. They expanded their footprint in lower-cost regions like Malaysia, and they positioned themselves perfectly for the moment demand returned. And that moment is now. Let's look at the numbers from the third quarter of 2025. The data shows a definitive pivot. We are seeing revenue growth re-accelerate, driven not by legacy chips, but by the demand for advanced packaging and AI-related infrastructure. The products division, which designs the ultra-complex gas and chemical delivery systems essential for chip making, is seeing renewed vigor. Why does this matter? Because you cannot build a 3-nanometer chip, and you certainly cannot build high-bandwidth memory stacks without the precise fluid delivery systems that UCTT builds. As chips get smaller and more complex, the number of process steps increases. More steps mean more etching, more deposition, and more cleaning. That means more UltraClean Holdings. But there is a second engine to this growth story, often overlooked in the filings, the services division. This is the recurring revenue component. It includes parts cleaning, coating, and analytical services. In the 2025 filings, we see this segment providing a stable, high-margin floor to the business. As the global installed base of semiconductor equipment grows, the need to maintain and clean that equipment grows linearly. This balances the cyclical nature of the equipment sales, making UCTT a more robust investment than it was 5 years ago. Now, we must discuss the AI factor. You won't find AI plastered on every page of their 2020 report, but in the 2025 documents, the implication is everywhere. The surge in demand for logic and memory chips to support data centers is driving their largest customers, companies like Lam Research and Applied Materials, to ramp up production. UCTT is the primary outsourcing partner for these giants. When the giants grow, UCTT grows. But here is the key: UCTT provides operating leverage because they have already built out their factories and optimized their supply chain during the downturn. Every incremental dollar of revenue now flows more efficiently to the bottom line. The margin expansion potential we are seeing in the late 2025 data is just the beginning of this trend. Let's also address the balance sheet. The transition from 2020 to 2025 shows a disciplined approach to debt and cash flow. They have managed their working capital aggressively. In the semiconductor industry, cash is oxygen. UCTT has preserved its oxygen supply, allowing it to invest in strategic acquisitions and R&D even when the market was soft. This means they are entering 2026 with a modernized product portfolio that their competitors, who may have cut costs too deeply, cannot match. So, what is the verdict for the long-term investor? We are looking at a company trading at a valuation that often reflects the cyclical past, not the secular future. The market treats UCTT as a simple metal bender, but the financial reports reveal a sophisticated, vertically integrated technology partner. They are essential to the transition to gate-all-around transistors. They are essential to advanced packaging. They are essential to the AI supply chain. The volatility of the past few years has shaken out the weak hands. The inventory correction of 2023 is effectively over. The backlog is building. The factories in Malaysia are ramping up. As we look toward 2026 and beyond, Ultra Clean Holdings is no longer just a recovery play. It is a growth play, underpinned by the most powerful technological trend of our lifetime. For investors willing to look through the noise of the quarterly fluctuations and focus on the multi-year trajectory of the WFE market, UCTT represents a compelling opportunity to own the picks and shovels of the AI gold rush.